Hey everyone, and welcome to today's Explainer. We are diving into the absolutely most awaited weekly report from PolymerBazaar. It's the final week of June 2026, and if you're navigating the biaxially oriented polypropylene or BOPP market, well, this is the exact intelligence you've been waiting for. We're looking at current trends and future forecasts, and honestly, there is a fascinating story playing out right now. It's a tug of war between what the market wants you to see on the surface and what's actually happening behind the scenes on the production floor. So, our goal today is simple. Separate the illusion from the reality so you can make the absolute smartest purchasing decisions.
Here is a quick look at our agenda. We'll cover 1. Headline prices and supply. 2. The current demand scenario. 3. Production dynamics and discounts. 4. Raw material trends. And 5. Strategic recommendations.
All right, let's jump straight into Section 1, Headline Prices and Supply. The illusion of stability.
Let's start with the baseline numbers for BOP tape and textile, or TT, specifically that 31 to 50 micron category out of Ahmedabad. Right now, we have the company rate sitting firmly at 169 rupees per kilogram. And right next to that, the open bazaar rate is hovering around 170 to 171 rupees. Now, on the surface, there are absolutely no official price changes being reported. If you just looked at these numbers in a vacuum, you'd probably think, okay, we're in a steady, unwavering market. It projects total confidence, right? But as an informed buyer, you know the official list price rarely tells the whole story. And that is exactly why we need to dig a little deeper.
Because here is the first real crack in that facade. Domestic supplies have already begun to ease up significantly. Think about that for a second. Even though those official prices haven't budged a single rupee, the actual physical availability of the material in the domestic market is loosening up. This is a massive indicator that the tight supply narrative, which is usually the whole reason those 169 to 171 rupee price tags stay up, might actually be running out of steam. When supply eases but prices stay flat, well, tension really starts to build.
That brings us to Section 2, the current demand scenario. A fractured market.
We do not have a uniform market right now. It is completely fractured. While TT demand actually showed some improvement over the course of the week, non-tape and textile, or NTT, demand was completely dull. Why the stark contrast? Well, the report points straight to inventory dilution and some incredibly fierce end-of-season competition among the major converters right ahead of the monsoon season. Converters are super focused on moving the stock they already have rather than aggressively buying new material. So overall demand just isn't strong enough to absorb that easing supply we were just talking about.
Okay, Section 3, Production Dynamics and Hidden Discounts. So, what's actually happening on the production floor? The plot definitely thickens here. Manufacturers have essentially cleared out their backlog orders. And what does that mean for you? It means a flood of fresh supply is adding directly into the domestic bazaar. Plus, some of these companies have finally wrapped up their export shipments. With those overseas commitments checked off, their entire focus is pivoting right back to domestic buyers to secure new orders. So that easing supply trend, it's accelerating fast. You have a huge wave of new material actively looking for a home in a market where buyers are already hesitating.
So how are the companies reacting to this growing imbalance? Well, because of that weak demand and the overall bearish sentiment, especially in the NTT sector, companies are quietly offering hidden discounts. To keep their massive production lines booked and running, they're handing out deals at pre-hike rates. They're obviously not going to publicly lower the official 169 rupee company price because that would immediately crash the market perception and devalue everyone's inventory. But behind closed doors, they are absolutely dealing. They need the volume, which basically proves that the official headline price is pretty much an illusion.
Let's look at Section 4, Raw Material Trends. Plunging costs.
This is where the leverage completely flips. International raw material offers took a significant dive last week. The actual inputs are getting way cheaper. At the same time, aggressive import offers have completely eroded buyer confidence because buyers know the inputs are cheaper, so naturally they expect lower final prices. But here's the kicker. It has massively improved the profit margins of the BOPP film companies. They are paying much less to make the product, yet they're still trying to maintain those high headline selling prices. This disconnect is the absolute core of the tension in the market right now.
Which leads us perfectly into Section 5, Strategic Market Recommendations.
The absolute number one takeaway for you from PolymerBazaar is this: maintain a lower inventory right now. The data makes it crystal clear that current prices are artificially inflated way above safe levels.
With supplies easing, backlogs cleared, and hidden discounts already happening, the market is practically a pressure cooker. The moment any major player offers a visible, public discount, it's going to trigger a steep, aggressive market correction and some crazy internal competition. You definitely do not want to be caught holding a massive volume of expensive inventory when that bubble pops.
There's a brilliant quote from the report that sums this up, and you need to keep it in mind at the negotiating table. Even if companies push hikes despite falling RM costs, they hold excessively high margins. You have to buy strategically. Don't fall for pushed price hikes. The manufacturers have immense padding in their margins right now because of those dropping raw material costs. They have the room to negotiate. Hold your ground, use this intelligence, and honestly, just buy what you strictly need.
Finally, let's talk systemic risks. If companies stubbornly try to prop up these high film prices without the actual demand to support them, especially while raw material costs keep falling, it's only going to dampen domestic demand even further. Buyers are smart. They're just going to step back, wait it out, and freeze the market. To make sure you're never caught off guard by these shifts, you need continuous, real-time intelligence. You can grab the full, detailed report directly from PolymerBazaar by visiting www.polymerbazaar.com, or just reach out to them on WhatsApp at +11 93754 24365. So, I'm going to leave you with a provocative question to challenge your strategy this week. With raw material costs falling, supplies rapidly easing up, and demand fracturing left and right, how long can these artificially inflated BOPP prices realistically survive before a major unavoidable correction hits? Keep that at the forefront of your mind. Thanks so much for joining me for this explainer, and stay sharp out there in the market.